Good morning. How's everybody doing this morning? Hey, Travis, how are you? Good. Happy Friday. And welcome to the folks watching us on YouTube. I'm JJ, and this is the tradingsyndicate.org, where we teach people in a practical way how to make money out of this crazy market. Hey, John, what's going on? Nate, how are you doing? Well, yesterday I said, look for a little liquidation back down, because we did the old high close. I thought, maybe we'd get a little liquidation down, allow the shorts to cover. Folks, when the market does this continuously up, 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 it means that, especially at the end of the month, end of the quarter. So today is month end. I had my dates mixed up. I didn't know Monday was the last day of the month. I thought today was, but it's not. Um, Today is month end. It is the 27th, and it is also a month end before a weekend. Last trading day of the month is Monday, going into a long weekend next weekend, so trading volumes drop off as large traders leave to celebrate the US's biggest holiday of the summer. Everybody loves a good 4th of July party. I know I do. 62.10.5 is my upper target, and we are 2 ticks away. So the short squeeze continues. Um, Market profile is very handy for showing us where the short positions are. The latest short position, of course, is the overnight low. Now, how do you know where the short positions are? It's where the buyers are, especially at 2:30 in the morning in New York. No one's buying this to put it away for 20 years. This is all short covering. So there's 62.10.5. We just hit it. Let's see if there's any reaction. There's not a lot of people here around to sell into this, so the only people that are going to be selling tonight are the people who have the supply, and that's here, and that's here. So that's the only supply you've got, and the supply is underneath price. One nice thing about markets is you look at where your current price is, and you look where the supply is. If the supply is underneath current price, then you're going to be distributing that supply. If the supply is above that current price, then it's probably going to be liquidating. So let's see if we hold 62.10.5. Hey Tim, how you doing? And overnight inventory is, I'd say, 99% long, 95% long, because there's all of the trading is above yesterday's close. and just this little bit here. So it's probably at about 95% long, which means we're looking for an inventory correction. But gosh, we've been looking for an inventory correction now for, the whole week. And so market profile is a beautiful thing to show you where your inventory is priced, where your shorts are trapped, where there's competitive buying. Those are wonderful things about market profile. It's hard to trade off of it, but it's great for situational awareness. And yeah, we're taking out 62.10. Next stop, 62.20 and a quarter. So what we do is now we're in distribution, which is profit zones. So green is twice, purple is 4 times. Hey, Danny, what's going on? It's a bit like a runaway train right now that's but it's not barreling down the tracks. It's just sort of, you still can't stop it. It's probably, I don't know how many accounts have been destroyed trying to short this market. It's usually a good amount. I'll give you a little tip, folks. At the end of the month and the end of the quarter, right? Asset prices tend to rise because fund managers don't want to look bad on quarterly reports. Now, this is an old rule of thumb, but the business never changes. Let me ask you a question. If you were managing $800 million and your clients wanted to look at your performance, right? And they looked at your quarterlies, do you think that if you were down a bunch of money in a quarter that they would keep their money with you? What do you think? Or do you think they'd move their money? Well, if they're really forgiving, they might keep it with you for a quarter or two. But after a while, they're going to move their money if you're losing the money. It's just the way it is. Capital is very quickly moved around the world, right? Wire transfer takes seconds. So that's why asset prices like to get marked up. Because people who get paid on performance don't get paid unless there's any performance. So there's no reason to sell this market right now. And if you're a swing long, check this out, ladies and gentlemen. If you were swing long under 6,000, you look like a rock star. If you were swing long under 59.92, you're looking great, right? You're having a good month. Why would you sell it? There's no reason to sell, right? And people don't take profits the way they used to. Oh boy. Now this has made it a very difficult trading environment for us. So now let me talk a little bit about the front end and the back end of the move, right? So we are now in the front end of this move up, right? And we just use a smaller scale, right? Well, this is the front end of the move. We need the back end of the move to short. So now say you got suckered into shorting now. Use this as your stop. Use 12.5 as your stop and look for bids at 9 if you're fast. If you're not fast, don't short the backfill. Because what we're going to try and do now is we're going to try and take this, you see this little purple 1542? We're going to try and take that and move it up here, right? To distribute, right? To sell that. We take inventory and we try and sell it at a higher price for profit. That's the name of the game, right? That's why they call it a market. Nobody ever talks about it, But inventory must be sold, right? What's the point of having 1,000 bananas if you can't sell them? You're just going to end up with rotten bananas. So distribution is tough to trade because it's choppy, right? Accumulation and distribution is a lot harder to trade than accumulation, I find, because accumulation can sometimes have some nice up and down moves that you can buy a little bit. The way to trade this market is to position trade it, and that's hard. That's really hard, especially in chop. If you're not used to managing positions, what you got to do is you got to buy a little position and manage that and sell it on the way up, right? Um, and you have to have discipline, right? I have not traded much this week at all because my discipline has been lacking, and I've been doing a lot of one-on-one coaching. So I've taken a couple of scalps, and I'm a scalper. I like to scalp, right? If I have time, I like to position trade, but I have to be, for myself, I have to be dialed in, and I have to really, really have discipline to position trade. Because, like, say for example, I wanted to go position long here, right? So I need a signal, right? Market comes down, can't break 61.99 and 3/4. So I start buying a little position here, right? And if it breaks 62.01, I'll sell a few contracts. And I'll get out if it breaks 61.99. But, and then the other thing is I have to sell that position as we go up. But if it breaks this level and I just kind of hesitate, I have to cut risk and I have to be able to use my account and spend more money in expenses because cutting risks involves taking a little loss, right? When you're selling contracts, right? So you have to have the account to do it. If you're trading for other people, then you have to let them know that their business expenses are going to be higher. They have to agree to that, right? It's difficult to adapt to markets. See how I told you guys? If you shorted that red candle, right, and you didn't see, that's a backfill, right? Let's go through and you guys learn a lot about candles, right? Let's teach you what candles really mean, okay? Right? Everybody talks about patterns. Let's actually talk about business, right? This kind of a candle pattern here means business is slow, right? And it's distribution. We're always distributing, right? When you move back, when you move up and then you get a red candle, that is, you just run out of buyers, so you put it on sale a little bit, and that brings buyers in, right? Like, what was that, blue light special at Kmart, right? When you lower price, it brings in buyers, right? People think they're getting a deal. And this is the worst kind of price action to short because it's slow and grinding, so everybody thinks that it's weak, right? Now, there's that red candle again. Let's see where it goes. I say it kind of stops probably around here, just at 11. Let's see if I'm right. The other interesting thing is this J period. For people who don't know what market profile is, J period happens at 7 in the morning UK time, which is 2 in the morning New York time. It also happens at 2 in the afternoon New York time. There are two J periods. And J periods usually, historically, correct inventory lower. When they don't go lower, it means that the market is seriously bid. If the market is seriously bid, don't short it, right? That is why it is essential that you find the bid when you're a trader, right? You must find the bid because that's what you're going to work off of. If you don't know where the bid is, you will short in the wrong place. You will buy in the wrong place. Does that kind of make sense? In the old days, traders would just short until they hit a wall. When they hit that wall, they would stop shorting, turn around and buy, right? See where the bottom of those two candles is right now? Are right now? Sorry, excuse me. So, a little bit of a red candle. What did that red candle do? Right? It brought in buyers, right? Candles are wonderful. Candles have been misinterpreted with a bunch of gobbledygook where they don't actually tell you how do you practically use a candle chart to make money, right? You trade a pattern or you slap an indicator on it, right? What about letting the candle chart actually tell you what the hell's going on? But in order to do that, you have to know what is going on to be able to interpret the candles. And nobody teaches you what the candles really mean. If people taught what the candles really mean, I'd be sure that it'd be less than 99% of traders fail, right? Candles are showing you how inventory is being priced. Is it being put on sale or is it being marked up for profit? Keep that in the back of your head. It will help. Hey, Moran, then they do. They do show a mini pour low on candles, don't they? Right? It's like a micro pour low, right? Because right at the bottom of that red candle and this green candle, the selling shuts off like a switch. Now, why is that? That's because the software, which is much smarter than me, senses the order flow and it knows that there are little bids here, buyers. So it stops selling and it raises price, and guess what? The buyers will follow, right? The buyers will follow price. J period is a good start, Howard, right? When J period doesn't correct lower, the market's tapping you on the shoulder and going, psst, 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 don't short me, right? Right? It's trying to talk to you. Right? Spend some time watching instead of always trying to be in a trade, right? You'll learn so much just by watching. You'll see that there's a seller right there, right? Now where's my little sticker for sellers? One sec. See, you can see the sellers are right there. See, at 62.14, just under 14 they're selling. They won't let it breathe above 14, right? Why is that? Because there's like everyone's competing here to sell, right? So Tim and Alexander and John and Howard, we're all sitting here, right, trying to capture those customers. But Howard all of a sudden goes 13, and John goes, 12 and a half, right? And then we start selling and competing. And that's why you get a trend line down because the sellers are competing, right? Now, as soon as we find a buyer, we'll stop competing and see if that buyer will chase us back up. That's how you figure out this balance stuff, right? Because the balance is where we engage and start selling, and this is where we stop selling. You see? That's why you get this kind of thing. Now, when balance is larger, you can trade it, right? So you want a nice balance area, right? Well, if I could only draw a straight line, excuse me, right? So you've got that, and then we want to trade, and if it looks above and then comes back in, you can short it, and it'll go down here. When it looks below and comes back up, you buy it, and it goes back here, and those are the rotations, and then you have a place to put your risk, you see? So your risk is structural, right? Because once that balance, once the market breaks out of that balance, the trade that you were going to take back into the middle no longer makes sense business-wise, right? So then you can just take off a bad trade, right? Let's see if it holds the bottom. Why does J period tend to correct? Well, usually, Howard, on a move higher, right, you can only bring in so much buying. After a while, the buying will exhaust itself. Unless it's, and in very, very unusual cases, like when a stock gets really popular with the public and everybody and their dog buys it, then generally you don't have any corrections. But in normal business, price goes up, and then it takes a break. It's almost like the market's taking a coffee break. That's what an inventory correction is, right? It's like, okay, we're going. Okay, let's take a break, grab a coffee, lower price, see if we bring buyers in, right? That's really the, if you can visualize it. Now see, if we break that 11 and a half, 11 and a quarter, I'll be looking for 9 and 3/4, right? It is painfully slow right now. Painfully slow, right? And not the best trading environment. And lately, this whole week, every Globex I've been going, oh my God, it's painfully slow. It's not the best trading environment. But it's true. And we have to trade what the market gives us. So I'm hoping after month end, things will get a little better, right? Maybe we get some liquidation on Monday, Tuesday, right? Any liquidation right now is being bought up quite aggressively, right? London's going to open in 5.5 minutes. London usually likes to liquidate, right, to get some cheap inventory before a move higher. Let's see if that happens today. Do we have any major news today? I don't think so. I mean, if you notice yesterday, we opened on a gap. We filled the gap, but it didn't last very long. As soon as we got into the gap yesterday on the gap fill, the market got bid up like rapidly, right? Thanks, Phil. PCE. Thanks, Jerry. How you doing this morning? Feds, Hammock and Cook speak. University of Michigan sentiment. Maybe more complaints. I don't know. I haven't read the news lately. I don't know what gems the president's dropping. What's up, Gem? Why you can't you, you can't sleep, eh? What time is it there? It's almost like 1 in the morning or something like that. Man alive. Now you see where that blue line was support before. Now it should turn into resistance. Hopefully. And if it doesn't, it means the market's seriously bid. When a market's seriously bid, it generally means that someone's desperate to buy. And who the hell would be desperate to buy at 3 in the morning in New York, which we're rapidly approaching, right? The only people who are desperate to buy are shorts who are trying to cover tonight, right? No one's desperate to buy this thing at 62.11, 62.10 to go long, right? Month end is a big thing. Quarter end is a big thing because traders like to have their books clean. You know, they have to everybody has somebody to report to, right? Your investors. And I think that's why retail trading is hard because you've got nobody to report to but yourself. China Commerce Ministry on China US London talks. US to cancel restrictive measures against China. Oh, okay. Yeah, let's see, Jerry. We could use some liquidation in a bad way. The market will trade much better if we get some selling. That's just a fact. It's not that I want it to go down and I'm short biased. I could care less. I just want better price action so people can actually make a buck. But I know it's the end of the quarter and the end of the month and the institutions are doing their two-step, right? Could these candles get any smaller? Like seriously. Look how tiny these candles are. The last 5 minutes. Look how small they are. That, my friends, is completely untradeable. Okay? Do not trade that kind of candle. You're just going to churn your account in commissions. Okay, here comes London. All right, London's got single prints too. All right, there's another little short position. So there's two short positions above the old overnight high. Wouldn't they try to be done with what, Phil? Gosh, one, two, three, four, five, 5 ticks. Where are my UK guys? Preparation? Oh, with month-end reporting? No, not until the end of the day today, Phil. Today is month-end, so it's the closing prices today that get reported. John, so what's the big deal with Yorkshire tea? Maybe the market hasn't had Yorkshire tea. It seems to be a big thing. People are very particular about the tea they drink here. Maybe London has had the bad tea. I don't know, because it's not moving. Holy Christmas. Jeez. I keep hearing this thing about Yorkshire tea. People get mad if it's not Yorkshire tea up north. So I don't know the difference between Yorkshire tea and other tea. Raj tried to explain it to me yesterday, but I think he's on the road. Either way, whatever tea London drank this morning before the open is not working because we only have 6 ticks. Jeez. Ooh. Come on, let's sell some. Yeah, we've got shorts trying to buy under 10.5. Let's get them some product. Okay, 1 tick. It's very handy for you folks because you can watch the offer, whether you have a TPO chart or a candle chart. And as you watch, see that was that place where they were selling before, they looked above, came in. Watch the offer. As the offer goes lower, it means sellers are competing. If the offer starts moving up, it means that they've seen bids. Right? If the offer is moving down, that's that red line, right? It means that traders are trying to capture the buyers if it moves down. See? If it moves up, it means that the market has seen buyers and it's trying to get those buyers to pay higher price, right? So let's see now if it can move up. See how it seems to just stop selling here? And then it's just still distribution. But we have so many people trapped short in these little green boxes that when it gets down, it doesn't sell off smoothly. It kind of sells off, sticks, goes back up, and then goes down, and then goes back up, and then just sticks, and then goes back up, and then goes back. So that's very, very hard to trade. See you, Tim. Have a good one. Have a good weekend. Right? Let's get that offer moving lower. Right? And that's filling in these short positions. See? As we move that offer lower. Right? And we want to fill these areas here. But we need sellers to do it. There we go. There we go. Come on. Yeah, that's good. 1 tick left at 9.25. There we go. Now, we filled those single prints. Beautiful. Next stop is going to be 7.75. If L period can't take the low of K, it will rotate back up, just so you know. So we're looking for this L period to come take out that K period. If it can't, the market will rotate back up. Okay. I just hear people talk about this Yorkshire tea thing like it's a big thing. See, you can see the competitive buying coming in now, and that offer is being raised, right? So I bought one contract at 9.5, and I just sold it at, where did I get it, Phil? 10.25, right? Because I'm just scalping just to see whether I was right that there would be bids, right? And that's an old market profile trade where you, so I bought 9.5. I put my stop here. I sold it right away because I knew that there was going to be sellers up here, right? But I'm just trying to get my brain to work this morning, right? And there's competitive buying off of those single prints, right? That's why market profile is helpful. It tells you, because I was thinking, oh, maybe I'll short under 9.5 down to 4, and then when I saw it, I saw this. These two candles had the same bottom, right? Same thing that Moran showed here, right? Boom, right? There's that rotation up, right? It's Now I didn't take that trade to make money. Took that trade using the micro to see whether or not my brain was working and how my execution is this morning. So Howard, we're looking for that point of control to move up from 6202 somewhere here, right? More distribution. These markets are really slow and you're not going to make a lot of money. So resign yourself to that fact. And if you're an experienced trader, go play golf. If you're trying to learn, watch what I'm teaching you and take it in. It'll be helpful, I promise, in the future when markets get a little faster, right? Now we're looking for sellers. If you're long, say you're long, if I was still long at 9.5, or where was I long? Yeah, somewhere at 9.5. I would be selling before 11.75, right? I'm going to front run. I'm going to front run that level. Oh, see? See how they sold before the level? Right? Levels here, they sold here. The top of the candles, ladies and gentlemen, the top of the candles are where sellers initiate. So that's where the sellers initiate, right? So sellers compete, and when sellers start to compete, the top of the candles are lower. And that's why you get that trend line, and that's when you can short. Any questions? Now, next week after month end, don't magically think it's going to get busy. It hopefully gets a little bit busier. By Thursday, it's going to slow down again because Friday's a holiday. So just be aware of that. You know, we're always managing our expectations because we're retail traders. I mean, asset prices are a little out of control lately, but hey, it's very hard to short. I wonder if Microsoft hit that 500 level yesterday. 498. Yeah, I'm not expecting the greatest price action next week. A little bit better than this, hopefully, Jim. Right? Hopefully, a little better than this. We don't need that much to make money, right? We just need a little bit smoother, right? Just a little bit, just for a couple of days, and then everybody can go away again, right? Have a good sleep, citizen. Ugh. Hey, look, if you have insomnia, at least this price action will put you to sleep, right? It's like it's like putting on Larry King and having a glass of warm milk, right? Just watch this price action. You are getting sleepy and sleepy, right? I remember when back in Canada looking after my mom. I'd be watching the market 3 in the morning, and I'd wake up, my head would be on the desk. I'm like, oh, okay, all right, yeah, right, better than Ambien. I don't know. When I was in the hospital, Petra, you guys gave me a sleeping pill once when I was, and I had the weirdest dreams. Oh my God, I'll never take a sleeping pill ever again. Oh, like I had these crazy dreams. Never again. That was funny. Yeah, I didn't do anything that stupid or crazy. But oh my God, I had these crazy vivid dreams. I don't even know what they gave me. They're like, "Here, we're gonna give you something to sleep," and I'm like, "Oh, okay, you guys know better." And I was like, "Holy!" The next night, they're like, "Do you want a sleeping pill?" I'm like, "No, no, 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 that's okay. Thank you, no." They should have just put a chart of this price action on. You'd be asleep in 5 minutes. I don't know, Jam. I failed biochemistry the first time around. I'm not the best person to ask. Would have helped if I'd gone to class. There is a rotation between 11 and a quarter, and let's see where the bottom of it is. 10? Boy, that's not tradable. So, Howard, we're just going back and forth, just trying to get rid of our inventory here. We've got buyers under 9. We've got sellers at 11 and 3/4. Let's see if those buyers are still there under 9. Golly. You know, and anybody who is unfortunate enough to be pulling the night shift on a trade desk, you know what they're doing, right? They're not looking at the market, they're shopping. Like if it was this slow on the trade desk, this is like when the traders are like, you know, they've built their McLaren on the website like 300 times with all different color combinations. You know, food eating contests used to be a big thing. Who could eat the most donuts in a minute? Um, yeah, it gets pretty stupid on trade desks. Now there's algos and all the fun's gone. You know, you'd have a room full of idiots having fun. Now it's just a room full of servers. Oh, a buy order. Right to the white line. Can really see where the sellers step in, right? Oh, let's see. Ooh, they're willing to pay over 12? Come on. Now, I'll talk a little bit about building a position, right? Give you guys something to think about. If you were to build, like, say, a long position, you'd be going long here, right, in this box. So what you would do is you try and buy under 10, especially when it looks below and comes up, and you buy a little long position here. But you got to get rid of it if it takes out the bottom of these candles. So that's your risk, right? So say you're long 5, 10, 15 contracts here. Put your sell orders in so as the market goes up, because you know there's going to be sellers, right? They're here, they're all over the place, right? So you become a distributor and they take your sell orders. Now, if they don't take your sell orders, it means that there's no interest at that level or somebody's undercutting you in price. So you hit the bid, right? You get out at the bid, right? What you want to do is you want to buy on the bid and sell on the offer, right? As the market goes up, it'll take you out of your position. And that's really the only way to trade these markets. It's very hard to scalp it because you never know when the big move's going to happen, right? It looks choppy and then all of a sudden somebody drops a big buy order, right? But your risk is defined. So if you're building a position underneath 11, right, your warning level is, say, 9.5, right? We'll give it a tick. And then your next warning level here is 9.25. And your out is here. So your risk is defined. Because if the market is someone's willing to sell at these prices, then what's the point of you holding inventory here? So the business reason for that position is gone. So say you're long 10 contracts or 5 contracts under 11, between 10 and 11, and you get rid of them between 12 and 13, right? Then you can make a profit, right? But you've got to sell into the strength. Don't hog the contracts, right? So you're long and you put your sell orders out so the market takes you out. Just like it did right now. It would have taken you right out of that. See what I mean? Hope that helps. Practice doing it on the sim so you learn the mechanics of it, right? We got a poor high. Sellers are competing at 14. Big surprise. But the thing is, practice it. Practice, practice, practice before you do it live. Because when you do it live and the market doesn't do what you want it to do, people tend to freeze or add to bad positions, right? But you have to be able to cut risk ruthlessly, right? So if you buy 5 contracts and it starts taking out your warning level, you get out of it, right? And that's going to cost you money, right? That's drawdown. So if your account can't take that, don't do it. Practice it on the sim so one day you will be able to do it. Those are things you can do, to work on your execution skill. So when bad things happen or things that you don't anticipate happening, you don't freeze, right? You train yourself to not freeze. You have to train yourself to not freeze. And you train yourself to have good habits, right? It's just repetition. So you want to do it where it's like second nature, right? So getting out of bad trades should be like scraping gum off your shoe. You should not get emotional about it, right? It's the cost of doing business. You want to keep those costs low. Yeah, if you're wrong, you're wrong. We have to be able to admit we're wrong. That's the most key thing in retail trading. You've got to be able to admit you're wrong quickly. The more stubborn you are, the more they're going to just take all your money. So simple, find the bid, right? If you're shorting, you short down to the bid, and that's where you cover. Once you find the bid, right, you build a little position, and as soon as the market goes higher, you sell into it. You always sell into strength, okay? Especially in choppy markets, right? If you got a big trend day, sure, then you can do that. But, you know, if you're a smaller trader, learn to build a little position and sell into strength, okay? Practice it. Practice, practice, practice. Practice, if you're long here and it dips under here, you're out, right? Once you've established where the bid is, right, you must get out of the trade here, right? And if it breaks this level, you start cutting contracts. And that's going to feel very counterintuitive. You can always buy them back if it comes back up over it, right? And add to the position. So trimming and adding to a position are very, very, very important, right? But you've got to be able to do it without getting all freaked out. And always put your sell orders in. As soon as you are long, you are a seller. As soon as you are short, you're a buyer. Okay? Remember that. And we're still in distribution here. Hey, the levels are working okay. 14 and 3/4 worked. And 9 and 3/4 is working. So maybe we'll just get some nice back and forth here. Right. And that's pretty much it for tonight. Be careful when the market is kind of farting around an overnight high, because all it takes is one large trader coming into cover and you'll get a stop run. So beware of those things. We saw it earlier here and in here, right? Those are things to watch out for, especially at the end of the month, end of the quarter, right? What we'll do in the room, folks, and yeah, speaking of the room, ladies and gentlemen, come visit us at the Trading Syndicate. We'll teach you how to trade using common sense, practical information you can use, right? No fancy talk. Make a living, manage your risk, right? Use the discount code, right, to get 25% off. It's going to be like 50 cents a day. And we'll teach you how to use those funded accounts like Apex and things like that to get discipline, use other people's money until you perfect your craft, right? But remember, everything we do is based on common sense, and it has to be based on the business. There's got to be a business reason for doing this, right? No business reason, no trade, right? We're in the trade, the business goes sour, we're gone, right? We don't invest in bad business ideas. This way you save your capital. And if you're not sure what to do, DM me. I'm always around, right? See? See how it just keeps popping up, and then back down, and then it'll pop up again. Now let's see if that level holds. It's just interesting to watch how markets are structured. And if you understand market structure, you're going to be further ahead than most people. Once you understand how markets are structured, you will see an interesting correlation between how markets are structured and how companies are structured. And if you know how companies are structured, they're going to trade differently. That's why most public companies all trade very differently than each other, because they're all structured differently. The amount of stock in the float, all of those things, right? So folks in the room, if you're up for it, let's do a session on building positions. Let me know if you guys are interested. Give me some feedback. Okay, but you have to promise me that you listen, because you can get into a lot of trouble when you're building positions if you don't do certain things, right? You have to have discipline. Alrighty, that's it for me this morning. Thank you so much, ladies and gentlemen. I'm JJ. This is thetradingsyndicate.org, where we teach people how to make a living with no nonsense, practical, disciplined business methods. And thank you so much for joining us. And we'll see you at 9 o'clock Eastern Time. Thanks, everyone. Bye for now.